We are. Hi, everyone. Steve and Tony here, and we've got Mark and Martin. Guys, do you want to introduce yourself? Say hi to everyone.
Hiya, my name's Martin. I'm the Customer Relationship Manager at Passive Tax, and I sort of work underneath Mark, and I'm normally the first point of contact with all customers and people who want to come on board. So if you've got any questions, you can always send them to me via Facebook or email or anything like that, and we should be able to help you out.
Awesome.
Hi, I'm Mark. Most people know me through Facebook as the Amazon accountant. I own Passive Tax, and we specialise in Amazon and e-commerce.
Awesome. We really appreciate you coming on board this evening, guys, especially with you being really busy with this massive migration you're doing your side.
Yeah, great to be here. Great to be here.
Thank you so much. We really appreciate it. And I'm sure everyone's going to get a lot of value from spending some time with you. And we want to really give everybody the chance to discover who Passive Tax are, because you guys are our accountant for all our businesses, for our personal taxes as well. And we thought what best way to share the great news to just introduce you to our community and really go and talk through questions we've received recently in our community, and also questions that we want to look at in terms of setting up the business, because at Online Seller Circle, we're very big at systemization, and accountancy is one of the big key pillars that we have to put in place when we set up a business. So we're going to go through some questions and answers, and then hopefully everyone's going to enjoy this session with you guys. And we're going to keep it very conversational. So if you want to reply back with any questions as well, you can do that too. So let's start with the first question that we get, and it's around capital investment for an arbitrage business. So we have many clients who use a mix of savings, credit cards, finance from angel investors or loans to scale their business. So one question we get a lot is, how do you manage all of that? So if you say a credit card, for example, what are the tips you would give to anyone to when they use a credit card so that they don't become all of a sudden out of control when buying products for their Amazon business on a credit card and still want to grow that business?
Okay, so one of the first things I would say about when you're using credit cards for a business and you're starting off is try not to mix personal expenditure with business expenditure within a credit card, because it makes it very difficult to track and find out exactly what you spend for the business. So you might be losing out on some stuff that you brought for the business that you might not categorize when you come back to look at it 6 months later. So in the early days, try to separate out your business purchases from your personal purchases by having separate cards. Now, I know when people start off in the world of Amazon, it's kind of a side hustle and they've only got one card and it's the personal card. But the minute you realize that it's going to be more of a business venture, then just look to get in the separate cards straight away from that. Mm. And from the point of view of purchasing on a credit card, it's obviously great to use that card within the first 30 days before you've got to pay anything back. But the minute you've got to pay something back, then that's coming out of your cash flow instantly. So just try not to put too much money on a credit card in the early days, and kind of use it for when that deal comes up where you want to buy an extra 20 or 30, rather than using a credit card as a source of purchasing. So that's probably the main thing I'd say about credit cards.
Yeah, because it can spiral out of control, can't it? If you constantly, especially I suppose in the lead up to Q4, when you want to invest in a lot of stock and you might have that stock sitting there for a period of time until it sells. So what's with regards to kind of credit cards, Mark, can a business owner use a personal credit card solely for the business?
Yes, they can. There's nothing legal at HMRC to say that you can't use a personal credit card or business account or personal bank account. HMRC says it just should be used for the business and for the business activities only. Now, the banks and the credit card companies like you to have a business credit card, because then they can charge you a little bit more for it, because the way they see it is, if you're going to be making some money, they want to be making a bit out of you as well. So they try to drive you down the route of having business accounts. But there's no law that says you can't just use a personal account for business transactions.
Because the reason why I ask is that.
Sorry. I think one
Go
of
on,
the tips
Steve.
you gave us early on was you can do that, but just keep it separate because it's a lot easier to manage if you have your personal credit card with business expenses on it and nothing else, no personal expenses. Because when it comes to doing your accounts, it can get really messy if you don't remember what transaction was what, and you want to keep things really easy for yourself, but also for your accountant.
Exactly, yeah. And if you think about the life of a limited company, you don't have to actually submit accounts until 9 months after your year end. So effectively, it could be up to like 19 months before you start looking at your month one transactions if you've not got an accountant in place and if you're not organised and you're kind of keeping everything in shoe boxes. So if you imagine trying to think back for 19 months, what was personal and what was business on a credit card statement, it's going to be pretty difficult to do. So the sooner you get into the habit of splitting everything out for personal and business, the better you're going to be.
Yeah. Is there any other finance options that you would recommend and those that you would avoid? So if someone has already got a credit card, they don't want to take out another one, is there any other finance options that would be available that you've seen or you've heard of and you've used?
There's lots of different finance available. You can obviously have bank loans. There's new kind of lending coming out like uncapped, where they will. It's like a new method of lending where they'll look at your monthly sales. They'll lend you around 25% of that. 50% of that monthly sales, and then they take it back at 25% of your settlement figure from Amazon. So you connect your Amazon account to their software, and they only charge like a flat fee of like 6% on inventory. So that kind of new kind of lending platforms coming out where it's different to the normal bank, where you just go and get a loan and pay it over 5 years and you pay a set amount of interest, sort of thing. Also, there's obviously there's other localized grants and loan schemes that are available. So like if you're in Wales, you can get some loans as a business startup, and that you could use that for development of your. We see that we've not had one of our clients suspended while there's been an outstanding Amazon loan. Yeah. So we kind of think that Amazon look at the amount of stock you've got in there as a value, because obviously they'll use that as an asset if you don't pay them back. So they look at the value of the stock that you've got within Amazon. They'll look at how much they've lent you, and if it's too close, they won't suspend you. We'll find a lot of. We haven't had one client that's been suspended while they've got an outstanding Amazon loan, and the interest rates are quite good.
Yeah, and if you pay it back quickly as well, they keep offering you bigger amounts. So it's a nice way to scale the business.
Yeah.
They've been offering so many people, especially this year, and then they hit everyone with these restock limits. So
I know, yes, yeah.
Just a kind of quick question in terms of obviously payment gateways and whatnot. So Amazon, I don't know if you probably have heard, they've changed the way in terms of certain payment gateways needing to be like approved or pre-approved to use. And beforehand, we had a couple of clients that were using TransferWise, now Wise, as their bank. Particularly one client who is actually based in the Isle of Man, but is obviously selling through the .co.uk marketplace. They apparently, at the moment, Amazon still hasn't approved Wise, and that's going to obviously potentially cause an issue if they don't. So would you recommend using a personal bank account? Because there's a real issue at the moment, by all accounts, Steve, isn't there, with someone being based in the Isle of Man, and you can't open a bank account over there and use it on Amazon, and you need to have a bank account obviously in the UK, and where they're located, that's proving a real issue. So I don't know if anyone that you know or a client has had this similar issue, and there's a resolution, I suppose, that you can
okay
help.
We've got no experience of Isle of Man banks and what you're allowed to do and what you're not allowed to do. I do know that, I mean, the whole banking world is changing drastically, and it's over the last 6 months, it's kind of changed an awful lot to where we were. I do know that there's two sides to the Amazon banking. There's the side that you disperse into, and then there's the charging side if you ever owe Amazon money. And the charging side has always had to be a regulated and recognised bank. And the disbursement side, you could put that anywhere. You could send that to Granny's bank account if you wanted to back in the day, but we know they're now clamping down on that because of money laundering. So I'd say if you do have access to a high street bank, so if you've got a high street personal bank, just approach them, see if you can get a high street business account with them, even if you're just using this for your disbursements and the charging side of Amazon. And then you know that your account's going to be secure because you're with a regulated, recognised bank. Now, I don't know if there's a list out on the internet of recognised, regularised banks on Amazon yet. I've not seen one. So maybe just stick with the high street banks and you should be okay.
Okay, brilliant. Perfect. Thank you very much for that.
We talk about bookkeeping. Some of our customers still want to do their own books. I don't know why. That's one thing I do not like doing. But what are the key softwares that you would say someone should have in place if they are trying to do that themselves and not use an accountant like yourselves?
Okay, so if you asked me this question probably 5 months ago, I'd say you could just use some basic bookkeeping software, no fluff, everything's nice and easy, straightforward, plain English. Asking me this today, I'd now say you'd want to go down the route of using Xero and then using Link My Books or A2X.
Yeah,
we recommend Link My Books, and then signing up for HubDoc with Xero because that becomes free, and then also get expenses module with Xero, because then that will control your personal expenses that you want to claim back from the business and your mileage that you're using for the business. So that's where we are now. We're currently moving over 400 clients of ours over to Xero, Link My Books, and HubDoc. It's a mammoth task that we're going through, but we think it's the right move. Basically, we've done this because we've realised that the smaller softwares that we were using and we were promoting, they didn't have the depth of development and assistance that we needed, and we kind of thought that we've outgrown them. So that's why we've had to go to Xero to get that depth of development and resources.
Yeah. So Xero is a very popular one. Link My Books probably a bit less. Does it do the same thing as Xero, or what does it do?
Okay, so Xero is your bookkeeping software. Link My Books is your link between Amazon and Xero. So it talks to Amazon, it fetches all your settlements, it creates your settlements as invoices, it sets the correct tax and VAT codes if you're VAT registered, and then it sends them to Xero and posts it as an invoice. So when you then get the settlement money coming into your bank, you pay the invoice off and you know Amazon have paid you the right amount of money, and you know that your Amazon transactions have all been categorized correctly. And that's what Link My Books is.
That's great.
So
Excellent.
basically, you can't integrate Amazon with Xero without Link My Books.
That's correct. You can't do that, yes.
Yeah.
And I suppose for someone doing this, because you said three separate, if I remember rightly, software. So you've got Expenses, Link My Books, Xero. HubDoc is part of Xero. So that's 3 separate costs an individual will be paying for, and then running the Amazon business and doing the bookkeeping and potentially doing the tax return. So it's kind of cost effective really to book a call with you guys, have a chat, talk over, the different packages I suppose you've got available to suit the client, because like you said, you for a full paying client, you give access to that software. Is that correct?
We do, yes. We include the costs. If somebody's taking on fully managed bookkeeping from ourselves and our limited company plans or our self-assessment plans, we pay for all those softwares as part of the plans. We set them up and we manage them for them as well. So the only thing that our clients have to do is they go into Xero and refresh the bank feeds every 90 days, which is under European law, that has to be done. And then they control the uploading of all their receipts and documents to HubDoc. Now, the beauty with HubDoc is you can do that various ways. So if you've got if your broadband was with Virgin Media, you can connect your Virgin Media account to HubDoc, and every time Virgin Media an email you saying we've got you a new invoice, it's automatically sent into HubDoc, it's recognised, it's categorised, it's sent into Xero, and then it's posted automatically in Xero. So the minute, so that's like Virgin Media doing the work for you. So as soon as they say invoice is ready, it appears in Xero categorized. Now, another way to do it is you can go to the website of HubDoc. You can have all your receipts in a folder in Google Drive. You can just select them all and you can drag them in, and it puts them all in one by one. And if you've already got rules set up for them, it will automatically categorize them and automatically send them into Xero. And then it attaches them in Xero to the line entries from the bank. Then when you go into Xero, you will just see a green box on the right-hand side with a tick in the middle, and you just tick it because you know everything has been reconciled. That's
amazing. That's the amount of time that's going to take from a client to set, them saving. So if obviously a client of yours has got access to all of this software, what would they just need to do? Would they need to set up obviously the feeds, but specifically for invoices? So just do exactly what you've said. So either copy them and drag them from their Google Drive, or set them up through specific rules so they feed in. And then do you guys take care of the rest? Or yes, we take care of the rest. So our bookkeepers will live in HubDoc, and that's where they see a copy of an invoice, and they'll see all the translated data that the software has pulled out. So it'll pull out the name, the date, the tax points, the VAT numbers, the VAT amounts, the VAT breakdowns. And then we're visually checking those, and then we send them. So we then send that into Xero. And then when that goes into Xero, it'll also send the copy back to a Google Drive, so it's stored, and it'll automatically post it then to Xero files. So a copy is also stored physically in Xero. Awesome.
I can say from personal experience as well, speaking to a variety of different customers, a lot of them have said to me in different times, because we would always advise with uploading receipts, try and do it every month or try and do it regularly. But let's be honest, it's easy to forget about, because accountancy, this is what I'll say to everyone I speak to, accountancy, the last thing you think about when you're doing your business. It's the last thing you think about. And then the receipts just drag and drop. And even our system as well, where we had Google Drive, it was an easier system than a lot of other systems. But this is just automating most of it, which is anything that's automated that you don't want to do, it saves you a lot of time. And we've been having training on it recently as well, and it looks quite straightforward to use. I knew nothing about accountancy when I came into this business, really, and now I could master HubDoc pretty straightforward. So it's really easy to save a lot of time for everyone.
Well, one of my VAs does one session every Friday, just chasing invoices, but then he spends however many hours, then uploading them, making sure they're there, renaming them. So that's just fun. I didn't know that HubDoc could do that. So that's fantastic news.
Yeah, it does some other bits as well that I want to talk to you about. So you can set a rule up on your email provider where if you've got an email coming in from Argos or Boots or wherever, you can set the rule up to automatically forward it to HubDoc. So you don't even have to forward that PDF attachment. It'll automatically find its way into HubDoc, and then obviously we take care of the rest again.
Ladies just created a task in Asana for the VA to do that. You did, didn't you?
Hey, honestly, that's brilliant. I didn't know I could do that.
And also, if your VA has duplicated some invoices by accident, then HubDoc will pick up on the duplications, because it's looking for order numbers. It's looking for anything that matches that's the same for an order number, a date, tax point, supplier, and then it'll automatically alert us that there's duplicates, and then we can address that and delete the duplicates.
Awesome. Brilliant. Well, we're all for, like Steve said earlier, efficiency, speed, productivity. So that definitely ticks a box. So in terms of those that currently haven't heard of you, want to talk to you more, like what they've heard so far, obviously we've got a link you've put a special form together. So anyone coming through OSC can obviously fill their details out. I know you guys are really, really busy, but if we share that link, what happens next? So once they filled out the form, what then happens in terms of that flow?
Well, I can speak about this because it's kind of my job from this point onwards. So when you fill out the form, I get a notification sent straight to myself. I then send an email to whoever's filled out the form with just saying like a welcome email, a little bit about who we are. You can have my personal email address, asking if you want to ask me any questions. There's a link to book a free call with Mark, so you can get a consultation with Mark as well. I tend to call you myself first, just to see if there's anything I can help you with before you have a sit down with Mark. So any questions you need straight away, and then we can help you with that. And then obviously the call will be booked with Mark, and he's free quite a lot. Once you've had the call with Mark, it'll be a case of just having a conversation, giving you a bit of a quote, trying to find out the plan for yourself, because our plans do tend to be bespoke, because we all understand that everyone's businesses aren't the same. So some people might need more work doing than others, and we sort of, our price is affected on that as well. And then it'll be a case of having that conversation. Once you're happy to go, we get you onboarded. There'll be a lot of questions, so you'll have to supply us information. But at this point anyway, you'll have contact with myself. We've got a number of people in the business, so if you want to speak to someone in bookkeeping, we can get you in contact with them. It's the same with the accounts admin and someone in accounts. So that will be it from there, from that point of view, in terms of getting you on board as a customer with us. We do try and give you as much help as we can throughout, and unlike a lot of other firms might have, we've got a lot of different modes of communication. So I've got an open phone line, so you can call me Monday to Friday, 9 till 5. You can speak to me on Facebook, or speak to the company on Facebook, or drop any of us an email. So you can, any questions, we know that, especially with accountancy in Amazon, that a lot of people have started this as a part-time thing, and then they're doing it full-time. So we know they might not necessarily have the experience or the know-how as maybe someone who's been a business owner for 50 years or 60 years. So we do try and help you as much as we can in every aspect of it. So any question you might have, no matter how small or silly you might think it will be, we're always happy to answer any question. So that's why my role is purely just dealing with customers on the first point of view. And a lot of these silly questions you might have, I don't even know the answer to, but there'll be someone within the business who will have the answer to it.
And you're also recently in our community as well. So if you want to reach out to Martin there too, you can tag him in our group. Just one thing I just wanted to cover off, because we have quite a few clients that are always looking at alternative strategies, wanting to obviously build out Amazon first, completely systemize it, outsource it out as much as possible. But because you're e-commerce expert and specialist accountant, so it's not just Amazon that you serve, is it, in terms of platforms? What other platforms do you do the books and the accountants for?
Yeah, we're mainly Amazon, but we have eBay sellers, we have Shopify sellers, we have people that got their own website. So we've got one customer that sells in 57 countries around the world. So he's quite unique in what he does. But so it's any kind of e-commerce is our main business. So, but we also know that when somebody has an e-commerce business, they might branch out into a different business. They might buy a rental property. So we cover that for them as well. So we do cover other industries within the accountancy world, but it's normally from clients that are existing clients that have an Amazon business, but also have a different side business as well.
Awesome. Brilliant.
Perfect. I just want to talk about tax relief, if I may. We get a lot of questions around that. What can you offset through your business? Things like car expenses, mileage, office expenses, phone bills. So do you have any guidance that you can give people on that?
Yeah, so let's talk about it as if you're running a limited company and you're the director owner, and then we'll talk about the expenses that you can claim. So basically, you can claim any expense that is wholly and exclusively for business purposes. And that's 100%. So as long as you've had that expense for your business, for it to operate, for it to grow, then you can claim that back. Now, there's going to be some overlapping expenses, which could be personal and business, like a car and mileage and home office. So what you do is, if you're using your car to start off with, you should get an app to record your mileage. So Xero Expenses has a mileage app within there where you can claim mileage. So what will happen is you'll just record that mileage over a month. You can record it over 6 months. You can record it over a year. You can do the claim every week. It's entirely up to you when you want to do the claim. What you're allowed to claim is you're allowed to claim 45 pence per mile for the first 10,000 miles. Then it's 25 pence every mile after that, and that's for a car or a van. If you're carrying a passenger, so say like you have an employee that goes with you on your RA trips because you're going to go and get a load of trolley full of stuff from Tesco's, you can claim an extra 5 pence per mile for that passenger as long as they're working with you. Now that can't be your daughter that you're dropping off at ballet lessons and you're classing her as a passenger. So it has to be wholly and exclusively for business. Okay, so that's mileage. You can do that. You can also actually claim for bikes. So if you ride a bike to your workplace, so say you've got a unit that you work from, and you go to that unit and work from it, but then you want to cycle down to the local Tesco's and start scanning the shelves. If you do that journey on a bike, you can claim 20 pence a mile.
No way.
So there's other stuff you can claim as well. I can't understand how you go to Tesco's on a bike, because then you won't be able to buy all the bargains that you're seeing. But it's just an example I've used. It's probably a poor example, but you can claim 20p for using a bike as long as it's for your business. So that kind of covered mileage. So if you're doing the mileage claim as well, you can't then claim other expenses. So you can't claim the fuel, the insurance, the tax, the servicing of your vehicle, because that is covered in the cost of the 45 pence per mile.
What about rental of the car?
Sorry?
What about rental of the car?
If you rent a car for business, then you can claim that back. Now, if you're using that for personal and business, rent that in the business's name, and then work out a fair usage of what you've done for personal, and then just put that down as personal use. So then you'd introduce an expense to the business of you using that personally. So that would effectively decrease your director's loan account by you saying this portion of the rental I use personally, and then that would, like I say, that would decrease the amount that you would be owed from your director's loan account.
95% fair usage.
Well, HMRC like the term fair, and they like it to be fair. But when they'll come around and do a compliance check, they'll ask you to explain your fair. So if you can explain fair is, I used the car, I hired the car for a week, and I used it for about 20 hours personally, and the rest of the time business, then you can go, yeah, that was 80-20. So just be fair with your calculations. There's nothing saying you can't be fair in your own advantage.
Yeah. Okay. Well, so what about so COVID, lots of people working from home, office, bedroom, dining room. What would one do in terms of claiming back or getting tax relief or offsetting that against the business? So heat, light.
Okay, yeah. So straight away, anybody that's having to work from home during COVID has been allowed to claim £6 a week. So it's effectively £312 a month as an allowance. Now, if they're an employee on PAYE, then they had to go online and fill a form out, and then that altered their tax coding. So then their employer would get a P6 tax coding notice to then allow for the £312 to be given back to them monthly through their payslip. Now, as you're a director of your company, because we'll stick on that model, you don't claim that back through your PAYE. What you would do is you'd normally have to submit a self-assessment tax return to HMRC being a director. So you would do that Home Office claim within that self-assessment tax return, claiming Home Office expenses.
I got you. See, this is why people need to just join, I think, with your practice, because it's you know your stuff, and understanding all of this. If you've never done it before, you know there's so much tax relief and so much money that one could be saving. You know, if they don't know about it. If you don't know, you don't know, right?
Yeah,
unless
exactly. Yeah.
But so what about kind of, because obviously me and Steve, I was going to ask mobile phone bills and things like that as well. But is that something? Sorry, Steve, to cut you off there. But
okay, yeah. So mobile phone bills. If you're going to get a contract for a mobile phone, try and get that in the company name again. If you can't get it in the company name, be fair with it. Don't go, I use it only 5% of the time for personal and 95% for business, because HMRC know it's normally the opposite way around in this day and age, because you're connected. So you might be using unlimited data on your phone, but that's not usage of your monthly contract, so to speak. So you couldn't really say that it's 95% use if it's all mobile data you're using. So just try and be fair. And if you put it down 50-50, then I think HMRC would have a tough argument with me to knock that down any other way, because that is a fair 50-50 on mobile phone. If you can't get it in your company name, then obviously get it in your personal name, and then again just do a expense claim every month to the business for 50%, but keep your personal bills to show that you've only claimed 50%.
Okay. With expense claims, because the old way, obviously doing it with you guys, would be to share a sheet within Google, the Google Drive. So going forward with Xero, how is there a different way to do that in terms of expenses, or is it
exactly? Yeah, you get a phone on your app and you'll log into the expenses. If you've got multiple companies, you'll click on the company you want to make the expense claim for. You'll just go in that, you'll type out the expense claim. If you've got a receipt, you literally I was playing with this yesterday in Starbucks, you just get the receipt, you just take a picture of the receipt, it automatically reads the information from that, and then it'll post it into Xero, and then you can automatically click it as allowable because you're the business owner, and then us as accountants can then click it through to say that is allowable, and we'll either put that to it can be done two ways. It can be put to your director's loan account as an expense that needs to to increase your director's loan account, or it can be paid. So you can then decide to pay that through using, I think Xero links with Wise Pay, so you can pay expenses from Wise. You've probably got to have a Wise account. There's obviously some funds in that, or it'd be able to draw funds from somewhere, but there's different ways of paying it.
Okay. Cool.
One thing that
much
people are surprised when they find out they can is education courses. So what can you say about that? So when people do like a training course, for example, with Online Seller Circle, sometimes it can become an expendable expense,
yes,
tax deductible expense. So is it for any kind of education courses, or is it only development of your business?
No, yeah, so it has to be, try and think of it this way. If you've got a limited company, that limited company has what's called a SIC code. That SIC code is an industry classification code, and that tells the government where you trade and what you do. So most Amazon sellers are in the online retail or the marketplaces, and that's where they normally sit. So if you're doing a training course and you're putting expenses through for a training course on that limited company, then you've got to make sure it falls within what your SIC code says. So you couldn't go and do a floristry course and then put that through if you was doing online retail. But you can claim a course for anything that's related to your business that's going to further enhance your staff or your knowledge or your processes and your procedures.
Yeah. So for example, people who join our academy, this is a business.
100%.
Yeah.
100% tax deductible.
Awesome.
That's great.
As long as their SIC code in their limited company is online retail. So we do have some people that come across that have probably started a letting agency, but then they come through and they've diverted into Amazon and they've not changed any SIC codes, and then they're doing courses. So we have to get the SIC codes then changed within the company's house to then allow for those training courses.
Yeah. Okay.
Can you do, because we're going from a tangent there, but I think that's a really good point. So if one needed to change the SIC code at a later date, is it easy enough to do that? Do you need to have a viable reason to do that? So let's just say that, I don't know, the SIC code needed to change to take on another potential channel through e-commerce, or maybe merge a separate strategy into the same company. Can that be done? Can a company have more than one SIC code, or can it only have one SIC code?
You can have up to 5. You can have up to 5 SIC codes attached at a company's house to any one company. Now, you've got to be careful on attaching different industries. So if you've got an e-commerce business and that you're running through Amazon, your turnover can escalate really quickly. And if you've got a side hustle as being a florist, that could be quite a low turnover. So if you mix the two together, automatically you're probably drawing the sales from the florists into your e-commerce business, and that would mean you'd not only have to declare VAT on the sales of your florist, you'd also be pushed closer to the VAT turnover quicker. So it's not always best to mix SIC codes within one limited company.
Cool. Okay. Perfect. Yeah, because we work with quite a lot of people that are in property that are looking to come into e-commerce, and that's one question we get asked a lot, Steve, isn't it? I've got a property business. Can I then use that for e-commerce?
Yeah, we find that quite a lot. That's why I mentioned it. We get a lot of property people coming in with a limited company that's done property, but the SIC code isn't Amazon, so that's why we have to go in and change it.
Okay. Cool.
Still talking about tax and efficiency, what about salary and dividends? Is it more tax efficient to take money out of your business as a salary or as a dividend? And when should you use either?
Okay, so first of all, we'll talk about dividend. You can only take a dividend if there is retained earnings within a company or you've made a profit that year. So retained earnings means last year you made a £20,000 profit. So you could take a dividend this year. This year you made a £10,000 loss, but your retained earnings is still plus 10,000. So you can take a dividend. So that's retained earnings. Now, profit is what you've done within that year. So as long as you made a profit within that year, you can take a dividend from that profit. Okay, so that's dividend. Now, salary, we always recommend to take the minimum, which is £737 a month currently for the tax year 21-22. That means that you don't pay any tax, you don't pay no national insurance, and your company doesn't pay any national insurance, but the whole 737 is tax deductible against corporation tax.
Yeah.
So and then what you do is, because you've still got a tax-free allowance of £12,500 and you've got a dividend allowance of £2,000, if you've made a profit within your business, you can effectively take £14,500 from your company each year, tax-free, national insurance free for both you and the company. Now, obviously, dividend comes after corporation tax, so you would pay 19% corporation tax on the part of the dividend that you've been taking.
Yeah. So at the end of the tax year, don't take loads of dividends and then realise I haven't got enough money in the bank to actually pay the tax return.
Yeah. Because then what happens then is if you've not made a profit, but you've been taking dividend, you have a chance to pay that dividend back. And if you don't pay the dividend back, then that swaps to income. And if you're already doing this as a side hustle where you already got a PAYE job, you're a 40% taxpayer, instantly you're paying 40% tax, 13% national insurance. So whatever you've taken, you're then taxed at that at like 52, 53%.
So let's just say, give a scenario here. So let's say that the Amazon business, the director, so there's one director, not two, make it nice and simple. So there's enough each month to take the 737 currently at the moment that they can take as a salary. They don't want to take any dividends because they want to obviously scale that business quickly and reinvest the money they've got available. Is there anything else that they can do to, I suppose, benefit financially from the business? And so I suppose, like what we spoke about earlier on, offsets, but is there anything else where things can be massaged where they can then benefit from, obviously ethically and solely for the business, but is there anything else that one could do?
Well, everybody's business is different, and what I say to every client that we're taking on board is save every receipt. Because we can tell you that you can't use a receipt for KFC, and we can tell you that you can use a receipt for Boots. But if you've not got those receipts, we can't find them. So save every receipt, present them to your accountant, and then he can tell you what you can claim for, what you can't claim for, whether you can claim a portion of it. They'll have a conversation with you about the training. They'll have a conversation with you about the mileage, and then we'll just see in your home office, and we'll see what we can claim. So it's not about it always has to be wholly and exclusively, but it also has to be fair. So unfortunately we can't massage we can't massage any numbers, but we can be tax efficient, and our job as accountants is to be tax efficient and making sure you're tax efficient. But that doesn't mean to say that HMRC are losing out. It doesn't mean to say that you're gaining. It means to say HMRC are getting the right amount of money for the laws in place, and you're paying the right amount of tax that you have to.
Yeah. And I suppose this is, just to kind of clarify, what this is if you're obviously got a limited company and you're a director.
Yes.
But let's just assume that if one was a sole trader at the moment and they were in full-time employment, obviously it's very different in terms of what they can do and what they can take from the business. Is that correct?
It is, yeah. It's a bit more difficult when you're a sole trader as to whether you've got a limited company. If you just think about a limited company, you've got different layers of taxation. you can raise your wages, so you're paying like you would do as a sole trader on tax and national insurance, and you can pay, or you can lower them and pay dividend, or you can take none, etc. But when you're a sole trader, it literally comes down to the amount of sales minus your amount of expenses equals the amount of tax that you've got to pay. So it is a lot more beneficial. If you're serious about an Amazon business, we say do it from the start.
Yeah. Rather
than starting off as a sole trader and then mixing it and then trying to swap over, because you can have some nightmares with Amazon. But going back to the sole trader, you'd literally just, if you're under the VAT threshold as a sole trader, in a tax return, you literally have to put 2 figures in. That's total sales, total expenses, and that will drive out your tax and the national insurance. And the most cost saving in any limited business where it's a director owner as opposed to a sole trader doesn't come down to taxation. It comes down to national insurance contributions at 13%.
Right, got you. I think one thing I love about you guys is, obviously we're full clients for OSC, and we've got the Amazon business with you as well. But you also do self-assessment for full paying clients as well, don't you? And I think it's up to a certain amount of directors in the business, if that's correct.
It is, yeah. So if you've got a limited company plan with us, then we cover the self-assessments for 2 directors. Now that doesn't include all your side hustles that you've got as a director. So if you've got lots of different sole trader activities, we won't work on all that information for you. But if you supply us the information in basic spreadsheets, then we will compile your tax return for you.
Brilliant. Okay. Cool. One other question that we get asked a lot, especially where we touched on this earlier about the restock limits and the storage limits that Amazon have been in real pain with at the moment. So let's say, because we're seeing this across the board in many groups where they have either got dead stock that's just not selling, they're having to remove it, or as you know, Amazon can damage things when they get delivered at the warehouse and can't get reimbursements and they have to pull that stock out. What would one do with stock that's expired, damaged? How would they write that off from the business? What's the best thing to do from a financial and a bookkeeping perspective?
Okay, so if you think about when you purchased that stock, you'd have put the receipt into the business. That receipt would have gone in as an expense. Now, you only obviously declare a profit or a loss on that when you sell the product. So if you don't actually sell it, you've already benefited from claiming the expense. So the benefit is already there. So even if you got all this stock back from Amazon and you throw it away, you've already benefited from claiming the expense. And if you're VAT registered, you've already benefited from claiming the VAT back as well on those expenses. So you only really need to do something different is if you've got all that stock that you've taken back from Amazon and you then sell that on eBay, that's obviously then going to just generate extra sales, which you then need to then declare within your bookkeeping software, and obviously along with that into your account. So, but if you're selling it at a lower rate than what you brought it for, just to get some money back and get some cash flow going, then you've still got the full amount of the expense that you've claimed within your books already. So there's nothing special that you need to do. What I do say to people is, if they're claiming all that stock back from Amazon, then just document what you've done with it. Because if it's grocery items, if it went as personal use, you should then create an expense of you to the company, and you should pay the company for using it as personal use. And that would just be done on a fair usage policy. But then if you're gifting it to local charities or food banks, just print out a piece of paper and ask them to sign what you're giving them. So if HMRC challenge, did you use 350 bottles of tomato ketchup over the summer for all these barbecues, you can say, no, I gave it away.
Right, okay. Perfect. Oh, you're on mute, Steve.
Voice call error. Can we talk about VAT? A lot of our customers and people in our academy are reaching the point where they are now required to register for VAT. But for people who are not familiar with VAT in the UK, can you give us a quick overview? Like, what's the threshold? How does it work?
Okay, we can't go into this. We won't go into this too deep because VAT VAT is very stressful for people. So we'll just give us some bullet points and we'll try and keep it basic so it doesn't scare people. So VAT is a value-added tax that is added on to most products within the UK. Now, that comes at different rates. There's 3 rates of VAT currently in the UK. So that's 20%, which is most things. There's 5%, which is some disability and some car seats, and it used to be feminine hygiene products before we left the EU. And then there's 0%, which is most grocery. And since January the 1st, 2021, feminine hygiene products now 0%. So there's 3 rates within the UK. And what happens is VAT gets added to a purchase. So if you brought something for £100 and it's £100 plus VAT and the rate is £20, it then becomes £120, and that's the price you pay. So the threshold for VAT in the UK is currently £85,000. So the minute you're getting close to that threshold, you should speak to your accountant and you should tell him. He'll have a conversation with you to make sure that you've checked all your marketplaces. You're not just looking at the UK, and you're checking all your sales channels. So you're including eBay and Shopify and anything else that you're selling, if you're selling on Facebook Marketplace, etc. So you've got the whole picture of where you are in your VAT. Then he'll advise you when you've got to register. Now, basically, this is when you have to register. We'll just work on some basic dates. Yeah. If you found out today that you had to register for VAT because you was getting close to the VAT threshold, you would have 30 days to register. So we go to the end of June, and then you would have 30 days to register, and you can choose a date to be registered from the 1st of August. That's what HMRC would expect. Now, you can choose to be registered from a previous date to today's date. So you could go back anywhere up to 4 years to register for VAT. Now, you wouldn't do this as an Amazon seller ever. You'd only do this if you wanted to claim VAT back on some heavy industrial machinery that's going to make a big difference to your now VAT registration. So basically, yeah. So one way of looking at VAT and averaging VAT is if you just divide 85 by 12, then that's going to give you around £7,100 and some pound, £7,200 around there per month. So if you're looking at your sales and they're constantly 7172, 7172, then you know you're going to be hitting the VAT threshold soon. Now, that VAT threshold is calculated on a rolling 12-month. So the easiest way to think of that is it's January to December, total sales, and then February to the end of January, total sales, and then March to the end of February, total sales. So you're rolling forward on a 12-month basis to find out when you're going to be over the VAT threshold. So that's some of the basics. Now, calculating how VAT is paid to HMRC, you'd take all of your sales, you'd calculate all the VAT on those sales, you'd do any adjustments for your 20%, 5%, 0% to make sure you're only declaring the right amount of VAT. Then you'd offset all of your purchases where you've paid VAT. So any input VAT can then be claimed on the expenses. That's offset against your output VAT, and then that then gives you a total figure what is due to HMRC.
And that's something that we hear a lot. Sometimes people say, well, I want to stay underneath that 85,000 threshold because I don't want to pay 20% off of my profit. And all of a sudden my business is going to be 20% less. And that's not the case because, as you just described, it's offset based on what you've paid already when you purchase products or services.
Exactly.
And then it's not the 20% that is going to go. And it's, as you said, it's not 20% on everything anyway. So some products have 0% or 5%. So that's really an important difference to make there. So when someone has registered for VAT with HMRC, what should they do with Amazon?
You need to go into Amazon. So what will happen is you'll register for VAT. It could take 10 to 14 days to get the certificate to come through. That would go through to your registered office address or your principal trading address. Then, obviously, when you get that number, you then go into Amazon you go into your the tax side of Amazon, and you put in your tax details. So you'd enter your VAT, and then you click verify. Normally, it takes about 2 minutes to verify. So what they do is they use HMRC. They used to use the European Union VIS to look up VAT numbers. Now HMRC have obviously got their own that is live. So Amazon check that, and that returns whether that's a live VAT, and it returns the name. So make sure when you've registered for VAT that the name on the VAT certificate matches the name on your Amazon account. Otherwise, it will not verify.
Yeah, that's very important. Otherwise, the account is going to go into verification, and that can take several weeks and cause a lot of headaches. As
yes.
Some of our clients in the academy have experienced in the recent weeks.
It's never a nice experience.
No, it's not. Okay, so once you've got your VAT number, you've informed Amazon, what are the watch outs inside Amazon? And what I'm implying here, say, it's the tax codes that you're going to set your products inside Amazon. So that's quite an important thing to do.
Yeah. Quite a lot of people miss this. When within your listing, you're not creating a listing, but because people say to me, well, I don't create a listing. Well, you create your listing, but you're attaching it to an Amazon listing. So you create your listing with your price, everything you want to attach to that. Within that listing page, halfway down, you'll see something that will say product tax codes. We call it PTC, and then it normally starts off as a gen standard is what you'll see, and most people leave it at that. That means everything you sell, it's going to put it at 20% VAT. So that could be nappies. It could be feminine hygiene. It could be disability products. It could be grocery. It'll put everything at 20%. Now, your accountant will use your Amazon VAT transaction report to find out your exact VAT obligations within the UK, and that is done and calculated by Amazon, which is done from your assigned PTCs. So make sure you get your PTCs signed correctly. If you're selling tea, change it to tea. If you're selling coffee, change it to coffee. Selling nappies, change it to nappies. Just make sure it's set right. And then your accountant will use that data to then calculate your VAT. And like I say, if you've got the PTCs set incorrectly, you'll be paying more VAT. And we can adjust that as accountants, and we do. So we'll go, because we don't have to use the Amazon data to submit to HMRC, but we use it to find out what the compliance is. If we see errors, we can correct that. Now, what we can't correct is if you've had a business-to-business sale within Amazon, and they put in their VAT number, and you've sold them some sugar puffs, and you've told them they can claim 20% VAT back on that, then you lose that 20% when that should have been 0%.
Yeah.
So it's very, very, very important on B2B sales, because your accountant cannot adjust that.
Yeah, because they will most likely be VAT registered themselves, so they'll want a VAT receipt from you, and then you'll lose the 20% right there. So that's
because Amazon will then issue that VAT receipt showing that they've paid 20% on a 0% product.
Yeah. Excellent. Great. So I think we could be talking for hours. I'm very conscious of time, but I think anyone watching this will realize that you are Amazon experts and you are the Amazon accountant for a reason. So we're very grateful. If anyone wants to have more information, Teddy's going to share the link to book a call with Martin, and Martin's going to share the form with you to fill out and book a call after that with Mark. So if you have any questions, feel free to post them in our community. And in the meantime, I just want to say a massive thank you to both of you, Martin and Mark, and thank you, Teddy. Great conversation. As I said, we could carry on for hours, but we're going to leave it there, and hopefully we'll be in touch with you again very soon. Thank you.
Thanks, guys.
Okay, brilliant.
Take care. We'll speak to you soon. Bye.
Thank you. Bye-bye.